Run it, I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah.
Alright folks, welcome back to another edition of Hoogie Boy Trades. Let's talk about the ES levels coming into the week of 11/29 first. Seeing some pullback in the overnight session. Obviously we got the riots going on in China, a lot of crazy things going on, and we got a ton of data releases this week. So on the 30th we got Jerome Powell speaking as well. We could see some reaction similar to Jackson Powell if he comes out super hawkish this week. So I am expecting some pullback into that 39.12 or 39.25 region. I can show you right here where I'm talking about those previous balance highs right down here at 39.12, 39.13 area. You can see this previous balance highs right here, and we overshot at 39.25. So that's going to be definitely a point of interest as well at 39.25. Right now we're trading at about 40.06. It's 40.05 does have a little bit of support up here. You can see in this balance that 4,000 to 40.05 has been kind of important as well. I do think we're going to lose that though and retest that 39.12, 39.13 zone. If we do that and we bounce, we can play a little bit of upside, but if not, then we can start looking for that gap to fill down to 30, all the way down to 37.50. We do have some support at 38.20 before we get there, but ultimately the gap goes all the way back down here at 37.50. You can see right here where we gapped up that morning, where we had the massive day, massive 100-point gap up after the CPI read. So obviously I'm looking for some downside. I do think that that 39.12 could act as a bounce into the seasonality. As long as nothing crazy happens this week with the data, then we still could rally into the end of the year, but I am kind of leaning more towards the downside now coming in this week. I think this end of year rally is going to stall now. We got close to the top of this channel, but ultimately I think we need to come back and retest the bottom of this channel before the end of the year now. It's quite possible that Powell comes out super hawkish and tries to get this market back down too, because we've been seeing rates coming back down, the dollar's been falling, and they're coming into some really strong support zones, recent support zones that could hold. So if we see those start to bounce, we're going to see this market start to roll over pretty quickly here. Alright, and looking at some of the data that's set to be released this week. So tomorrow we got two Fed presidents speaking. We got James Bullard and John Williams, both at noon. Tuesday we have the S&P Schiller U.S. Home Price Index, FHFA U.S. Home Price Index, and Consumer Confidence Index at 9 and 10 a.m. Wednesday is massive. We've got the ADP Employment Report, real GDP revisions, real gross domestic income, real domestic final sales revision, trade and goods deficit. Fed Gov Michelle Bowman speaks on small banks at 8:50 a.m. 9:45 a.m. we get the Chicago PMI, 10 a.m. job openings, 10 a.m. quits, 10 a.m. pending home sales index. Then we got a couple more Fed speakers, and 2 p.m. the Beige Book, which, you know, we might not see too much reaction off of these, but then on Thursday we obviously have actually Powell speaks at 1:30. So I'm sorry, Wednesday is the day, November 30. Fed Chair Jerome Powell speaks. It's not just two Fed speakers. We got Lisa Cook at 12:35, and then at 1:30 we got Jerome Powell. So yeah, Wednesday could be massive. It's going to get very volatile around 1:30 p.m. as he's speaking, as we know. And then the Beige Book comes out at 2. And then Thursday is also important because we got initial jobless claims, continuing jobless claims, PCE price index, core PCE price index, which the Fed this is what they used as rather than CPI. I mean, they look at CPI as well, but PCE is a lot more important to the Fed. So we got the core PCE, all those at 8:30. So remember, that's going to be pre-market. It will be kind of like playing earnings if you're going to try to swing into this, expecting upside or downside, because you know these can go either way. 8:30 a.m. we also got real disposable income, real consumer spending, which obviously the holidays are going to boost some spending, some consumer spending. People have been out shopping. Looks like, you know, Cyber Monday is going to put out record numbers. Black Friday put out record numbers. A lot of the sales are still being done online though. So and then we got more Fed speakers. We got 10 a.m. the ISM Manufacturing Index. This is on Thursday, December 1st. Construction spending at 10 a.m. And then Friday, once again, we have non-farm payrolls, unemployment rate, average hourly earnings, labor force participation, 25 to 54-year-olds, and then another Fed speaker. So obviously this week is going to be volatile. With that many data releases, you know, we're looking at a very volatile week. So it looks like tomorrow we could expect chop. Might see some bounces, some movement. I don't know about bounces. Might see some downside or upside around noon. We'll see how Bullard comes out and Williams comes out. But I do expect us to probably bounce this, this sell-off that we've had overnight in the morning. But eventually we're going to go visit that 39.12 area sometime next week. Even if it happens fast on Powell speaking on Wednesday or something like that. We get these big volatile moves, and we got to prepare for that. It's dangerous trading into these. But yeah, if you do catch the wrong side, you catch some big moves. But it's really not, that's not my kind of strategy. I don't really want to try to get in front of news and end up missing, 100 points. And especially trading options, you don't want to be that. It's not a bad idea to trade some equity or short some equity, in my opinion. But if you're playing options, it's definitely, like I said, it's a lotto. It's like playing earnings when you're trying to trade into these. You want to play the reaction, not try and guess the reaction on a lotto. So that's kind of what we're looking at. And as always, I use MarketWatch. This gives you all the data releases. The marketwatch.com/economy/politics/calendar. It gives you everything you need for the week, what you need to be paying attention to, and the times. So it's definitely a useful tool in your trading. All right, so moving forward, I just wanted to talk about VVIX. This measures the volatility of the VIX itself, and you can see that we've come down awfully low again, and I'm kind of looking for this to bounce. 2022, this has been the absolute lowest it's gotten as far as the VVIX, and we started to come back up. This shows that downside protection has been fairly cheap. Looking at the VIX, you can also see that volatility has died down, and this has been a good spot to start looking for some put protection on your longs. Getting short in this zone. Obviously, we can come back down in the 19s, but I do expect this to start looking to have some upside. Obviously, we're going to gap up tomorrow if we open where we're at right now. So the VIX should bounce, back up over $20. 20.50 was where we closed at last week, I believe. Yeah, so we're probably going to see this gap up over 21 fairly easily if we open up down here close to 4,000 tomorrow. But yeah, I would definitely suggest, obviously I'm not a financial advisor, but if you're an options trader and you're still long, I would recommend definitely picking up some downside protection on equity or long-term options, depending on how you trade. All right, so that's kind of what I'm looking at for this week. I'm going to keep it short and to the point tonight. I had a little bit of a bug the last couple of days, so I'm trying to take it a little bit easy. But I wanted to get something out to start this week because obviously we got a ton of data this week, and I am expecting some downside. I think we're about due to start pulling back, kind of fake out these end-of-the-year bulls, which I've been one of them. But I think we've kind of done what we can do for now, and we got to, at least pull back into that close to 3,900. Especially with all the data coming out, things have started to shift. We're starting to see the signs of, this market reversing. And obviously we opened up with a true gap down, especially if we open down here, and it doesn't look like it's getting any better as I'm watching it right now on futures. So remember, to smash that like and subscribe button. Helps with the algo. I'm trying to get more videos out to you guys. I'm going to do some beginners trading videos this week as well, as far as, going over some of the Greeks and some of the different option strategies that I use, and just some beginner stuff in case you're just starting to trade and you're trying to learn how to trade options. Remember, you definitely want to join our Discord. The Discord is Bullprint. I'll leave a link in the description to all my videos. If you want to join, just follow that link. You get a free 2-week trial now. It went from a week to 2 weeks, so take advantage of that. I think you'll be very impressed. We got a great community, so 5 really great analysts, including myself. Sending alerts in there so you can copy trade for a while till you get the hang of it, and then you can go start making trades on your own. That's the goal. We want to just help educate people so they can make their own trades. That's the goal, long term, to get you to where you can make your own trades. We're trying to help all retail traders. As always, I appreciate y'all for watching. I love y'all. Peace.